What's going on, Chris here? So far, I'm in first place, and um, what's funny is like I'm first place, but not the highest alpha. Looks like Green Blues number one in alpha. I got a higher score than that, and my monthly and total gain is higher than his. I guess maybe he's changed positions less, but these are his active positions. Mostly just 2% everything. So maybe he has less drawdown. I mean, that's good. The best I can surmise. I got 1.53 on return over inception, and I'm monthly gain 24%, 53% total gain. And these are my positions. So we're going to go through the positions and just the bias, and we're going to figure out invalidation, where I would be wrong. Because it's really important. If you want to stay number one, you just got to know where you're wrong. And once it hits that point, you're like, I'm wrong. And then it'd be very, this is a really cold business. So you just got to be cold in your analysis. You can't be just too passionate. You got to be very dispassionate. So obviously you can be passionate and fervor and just your analysis and all that. But as far as like just falling in love with just what you have to be very dispassionate. So let's go ahead and jump in. So this is the weekly, and there's a little bit of things going on here. We could lessen the noise really quick. So right here we got a weekly market structure break, and it's been acting as like it broke to the downside. And so far, we've been kind of marching our way back. And the thing I want to draw attention to is these down closes. So a down bar, the close is on the bottom. On the up bar, the close is on the top. So the saying for supply and demand is the down bar before the upswing. The up bar before the downswing. It's the opposite. So the down candle, the up candle before the downswing, the down candle before the upswing. And it's the bottom, and then on the up candle, it's the inverse. It's the top. Those are the closes. And the idea is those are resistance and support. So based on this weekly and those same rules, I would need this to flip, this line to flip to where we close the week above. And so since we don't have that luxury of having to wait 7 days for it to happen, but that would be this first start of where the bulls are taking back control as we close the week above this red line, which is the close of this weekly candle. And so far, it's rejected with a wick on that the previous week, and then this last week, we totally got rejected. So far, the bulls are not winning in terms of a weekly closing basis. They're losing. And that's kind of what my portfolio is built upon, is the bulls losing. So for the bulls to be winning, this is where I would be wrong if we close the week above 40, 66, 48, spot 48. Now on the daily basis, this is H4. On a daily basis, if we were to do a little bit faster, so this is resistance now, and now that's resistance. This the same principle, the down candle before the upswing. But the thing is, we we moved away from this day, and then we totally closed below it. So now it's, instead of support, it's resistance. So this was a green, and then now it's a red because it closed below. So we might get some of these where we could close below here on one day, but then on the next day totally reverse like that. So that's possible, but right now we're just trying to stick to the rules, and we don't have to count this as support just yet. We could just say there's weak support, but this is resistance. So basically, if invalidation is if we take out this high and we close the day above this close, this up candle before the downswing. That's the if this were to be where the bears are, it would be the up. This would be the candle, the up candle before the downswing, and that's just how the logic flows. So we would need to close above 39.60 spot 5 on the day in order for it to be more bullish. But technically, the bears are still there until we close the day above this level. So right now we could just call it we're leaning bearish. The longer we do not close a day above 39.60 spot 5. We are bearish, or we're bullish when we close the day above 40.87 spot 6. So we would need a daily close in order to switch to bullish, a new all-time high pretty much for this range. Not all-time high, but like for this range, for this, I guess, last week high, we would need to close above there. But for us to not lean so bearish, we would need to close the day above this daily candle, which looks like it's increasingly difficult. I mean, this is the 8 EMA. It's a really fast moving average, and it's quickly approaching this line. So that would be kind of where I would slow my roll as a bear, and maybe decrease position sizing if we start to close days above here, just because it would signify the bears are getting weaker the more daily closes we have above here. And so far, we don't have any evidence to suggest that the bears are getting weaker. We have evidence to suggest the bears are getting stronger because we closed the day below daily support, which was daily support because it was the lowest down close day, and it held up the very next day on the wick, but the day after it totally closed below. So this one basically flipped to red, but we didn't count it just because of possible error. We just counted this. But the invalidation for the day throughout the week, if we close the day above 39.60 spot 5 on the S&P 500. So now we're going to take the same process and apply it to the portfolio that I have, and we're going to just assess where everything's at. Like with the crypto is going to be the most interesting because the weekly close hasn't happened yet, and that's coming up very soon. But at least you'll have an idea. We'll have an idea if we're close to closing above or below. Ultimately, we won't really know until the actual close of the week. But we can look at these four and show analysis of just, am I on the right track, or am I in danger of the position becoming a loser? So UVXY is the first one. We'll go back to the daily. What happened here? This is the wrong. It is the right one, is it? Yeah, it's the right one. Okay, yeah. No, this is the right one. Okay. So UVXY, I'm bullish, and on the weekly closing basis, you see how many up candles there are. There's only one up here and one down here. So that suggests that the up candle before the down move is this, and the close is resistance. So technically, I have free range all the way to here on a weekly closing basis. So right now I'm doing good. And then as far as like a down close for support, because we closed the week below on this candle and we closed it here above reclaiming, it's a reclaim. So this week wasn't support. Now with it closing the week above, it is support now, and it's supposed to signify a swing failure pattern. Basically, it's a reclaim that it is support, and so it's good that it closed above this close, this weekly close, and then also this bottom, this close of the previous week acted as support on the wick, as you can see. So for the most part, where I would be wrong is if it closed back below, turning this red. If it closed back below here, that would be the weekly invalidation, where I would be wrong, flat out wrong, that is not the bottom, and it's going to go lower. And so far, like I don't know, I bought in somewhere around here. I don't know. It's like the general position sizing is like right here, but on a weekly closing basis, if we close below here, I am wrong on the VIX. But so far, on a weekly closing basis, this is showing that support's holding, and the only resistance is up here. And then we got the moving average channel that also acts as resistance in some way on the weekly. Is this on 20? Yeah, good. All right, and then on the daily closing basis, we marked it up, but the up candle before the downswing, there's resistance. The up candle before the downswing, there's resistance. Now this flipped to support because we closed above it. And this one we can get rid of or unlock it, and then, because technically, let's see, is this a shared line? No. Technically, this was resistance on this it closed below. It was on this wick and this wick. And once we closed this day above, and we came back again and closed the day above, like it's acting as support. I mean, but technically we could just let go of it and it just focus on these two lines on the down candle close before the upswing, and then again, because this acted as support on this down daily close. But according to the daily, we're leaning bullish on the VIX, but this is the leveraged VIX, so just a heads up. And we can look at the VIX, regular VIX, but the leveraged VIX is saying that we're bullish right now, and the next resistance is here. And where I would be wrong is if we closed the day below 7.54. If we closed the day below 7.54, then I would be wrong. But on a daily closing basis, it's looking good. On a weekly closing basis, it looks good. So I'm not complaining about my position and just how it looks. So going to the non-leveraged version of the VIX, this is the next up candle, weekly up candle. It's right there. We can put as resistance. And then there's this one right here, which you could see hit all these wicks here. It worked really well. Obviously, you can put one here, and it doesn't work for every single one, but it's a good rule of thumb. That's what I'm saying. So, we would need to see next week, but technically we would count this as a resistance until we see just more progress, because this is an up candle. We could assume right here that this is a reclaim. Once we close this week here, we could even call this one a reclaim right here, and we can make that support, and we would need to see it hold above here on the weekly on the VIX. But yeah, that would be how we would play it. Or we could say if we close the week below here, I'm wrong. I'm pretty much flat out wrong. But yeah, if we were to lose this level, we would become increasingly wrong. Daily closing basis, it looks very similar to the UVXY. Up candle before the down move, up candle before the down move, downswing. So resistance at the top closes, and then the up candle before the down move was resistance for this candle, and for this candle. But as soon as we closed this day above, it became support, and the down candle closes now acted as support. So right now we've broken two daily resistances and had higher closes, and the next close that's a down can or up candle close is all the way up here, 7% away. So I would say that's a success on a daily closing basis and a weekly closing basis, that I'm becoming more increasingly correct in my portfolio choices with every day that passes and closes correctly above those lines. Where I would be wrong is if we closed below 22.28, roughly below these levels, but specifically this down candle close. This down candle closed on the day is supposed to act as support. So we could just get rid of that and get rid of that. And if we close below 22.28 on the downside on the day, I will become increasingly wrong. And that's what we don't want in the portfolio. But this is kind of where we get our confidence from, is just these levels. All right, so we got the VIX done. Let's do the 2x bear oil short. Drip. It's an ETF, if you weren't aware. We'll go to the weekly. So up candle close before the up candle before the downswing, and that's the close, and up candle before the downswing, and that's the close. And those are pretty far away. So it's good to see that resistance is far away. Something that would really ruin the portfolio is far away. That was just the main message. And then our past up candle before the down swing got closed above. So this was resistance, and now it's support. And now we can count this down candle before the upswing as support, because it's a reclaim. We closed above it, and it's supposed to now be support. And if we were to close any week below these levels, especially down here, we would be in big trouble. Because, just closing below 14.51 would be big trouble on the week. So, because this week's important with the CPI and the Fed funds, we're going to be looking to the daily closes. So we're leaning bullish there. We marked out where we would be wrong. So on the daily for DRIP, we're looking for kind of a place where we could say we're wrong. So marking out, we flipped this up candle before the downswing move, and we closed the day above it, and then the very next day we tested it and we moved higher. So on the resistance side, we have all the way up here, so that's good. 43% to the upside before we can hit daily resistance. So that's a good risk to reward in my book. But if we were to close below 15.17 on the day, I would become increasingly wrong. That's basically how that works. And that's it. There's nothing much that needs to be said. If we close the day below 15.17, I better be cutting all of it or some of it, a majority of it, because it's looking like it's not right through the week. But moving on, SP 500 leverage short 3x. I mean, we already went through the S&P 500, so it's very similar. This is just the leverage version. So the up candle before the downswing, they close. We closed above it. So now this is support. So we broke the bears right there. And for us to be wrong, we would need to close the week below it. Right now we hit that moving average channel, so we're kind of at some resistance there. But we could consolidate a little bit. But it's a little hard to say where we're going to be next. But we're making down lower up candle weekly closes. So that's not good for the bulls. But where we would be wrong is we closed back below 20.5 when we lost that reclaim. And the next support where we would be wrong would be 18.84. Now, throughout the week, if we want to check through after CPI, like how wrong we are, it would be this down daily close right here. If we close the day below 20.38 on SPXS, we are flat out wrong. But we have closed above this up candle close, and now that resistance that acted for this candle and this candle for those days is now support because we closed the day above. We broke those bears and we're reclaiming levels. So technically the next resistance isn't until 18% on the day, daily closing basis. So it's good. It's a good risk to reward. The next possible resistance is far away. That's what we want. S&P 500 real estate short 2x. On the weekly, so we marked this up a little bit, but let's get rid of that. Just some unnecessary stuff. So this is a little threatening right here, this line. You need to keep that in mind. But it's in line with this resistance on the weekly closing basis. So remember, up candle for the downswing. For every up candle, we want to see a semi downswing. And so with this, it's basically a reclaim that we're seeing here. We closed. We haven't closed above the week. We haven't broke the bears on the week yet on SRS. So this one's kind of the slowest moving out of the ones we've looked at. This is the one that's had the least amount of success, is the short real estate. And we need this week, next week, to close above. If we don't, and we end up turning around and closing below, we're flat out wrong. Below 17.08. Now, on the daily closing basis, we can see kind of how we're doing, and we're exactly in the middle. Like, there is no winner right now. We would need to close above those red levels, specifically 17.94. Oh, it would be this one. 18. We need to close the day above 18 in order to really say, okay, we're getting a handle of it. Like in the middle of the week, before the week close, we would need to close above 18 on the day, daily closing basis. But because that hasn't happened yet, there's 2 red lines, 2 green lines. We're not winning. I'm not winning. It's neutral. It could go either way. So that's what I wanted to say, is that SRS is not a winner, it's not a loser, and we need to see every day throughout the week where it closes, and we'll get an idea which way it's going to lean. Right now, it's unknowable. Ethereum Classic. So Jim Cramer got really bearish on crypto. So that has me nervous to hold crypto. So our goal is to figure out do we is Jim Cramer correct? The inverse of Jim Cramer, is that correct right now? Because it's not fun betting against inverse Jim Cramer. I'll tell you that. Inverse Jim Cramer is scary to bet against statistically. All right, so there's our resistance on the week, and there's our support on the week. It's very, very tight, very simple. I mean, I basically looked at this at like for 5 seconds, and I was like, there it is, and there it is. But the good news is, if we are correct on the bears, we got a ways until support on the week. If we're wrong, we got a really bad risk to reward ratio where we could lose a lot. So that's something where we're kind of like, oh gosh, like this is where the uneasiness is coming in. That risk to reward to the upside looks crazy, like 23%, but compared to my reward, if I'm right, 17%, it's not as big. But the good news is no one's winning exactly on the week. So that might mean we might need to rethink our position. We have to look at what the daily closes are saying. So up candle for the downswing. There was one. We got all these wicks here and a turnaround. And then we got this one, the next one. And then we got the next one here. And then where's the next one? Okay, so this, we have 4 hours. So we would need the next 4 hours for it to close below here. And if we don't, it's suggesting that it wants to go higher. Support wise, looking at this one, a nice reclaim here in some way. This one. So we would need it to close at least the day below here. It's gotten really tight, lots of, like a doji, 2 dojis almost, but this is the down candle before the upswing. So the fact, if we close the day above 19.17 on Ethereum Classic, we're becoming increasingly wrong against crypto. So this gives me some reason to want to drop my shorts on Ethereum Classic on the daily closing basis. So I want to see where it closes the week. If we pull back and if we just stay here on the week, but I mean where we close on the day, if we are able to close below 19.135, then I'll be okay. But if we're closing above, then I will not be okay. But what this could be is a swing failure pattern. So let's put some more harder rules on this thing. So looking at the weekly closing range, I think we kind of have to open ourselves up on the range. I think we could loosen up to say between this line and this line, we can discern better. This is just neutral sideways, and that's how we could go about it. We open the range, and then if we close the day above this line, we're really wrong, 19.55. We close the day below here, we're right. We need this to turn red and close the day below. So right now, we're at resistance here. We're into supply, which is like the bears. So we need to wait it out. We need to wait this out. It's going to chop around, and then it's going to pick a side. And I'm uncertain the way this will go just because of Jim Cramer. If it were just following the indices, then I'll be like, okay, there is no problem because we can see that the indices are leaning bearish. But we can't depend on correlation with indices. Uh, Correlation with Jim Cramer, I feel like, is a lot more strong. So we're waiting until we get a cross and close above that red line or the green line of 18.7 or 19.55. That's what we're waiting for on the daily closing basis. So it's neutral. All right, next, Adam. So we could set alerts for that. Like, I think that's something I would like to do. Just because I don't want to have to be looking at this all the time. Greater than. And then less than. Perfect. Now we will know. All right. Next, Adam. It's right here. So it looks like we marked it up. So weekly in resistance and support is very tight. You know, we're failing this weekly moving average channel on the Ethereum Classic. You know, we're pretty far below it too. And we go on the daily closing basis. I almost want to say the same thing. So far, this is working. Of the rules of the up candle daily close before, you know, up candle for the downswing, up candle for the downswing, up candle for the downswing, and then down candle for the upswing, down candle for the upswing. So right now we're kind of just coiling up, and it's got to pick a direction, and we're gonna do the same thing. We're gonna set alerts, and technically I want it close to the outer ranges of this. It's like I don't know. Like I think with this moving average here on the 24, I think it's safe to just use this as an alert. Greater than on the daily close above. Less than daily close below. Less than. All right, so that's that for Adam. We would be wrong if we close above 9.94. We will be increasingly right. So out of the portfolio, it looks like the fragile points are crypto and SRS. Just because we're so the whole idea, you know, VIX. I bet on UVXY. I was betting on volatility, and I thought, what's higher beta than crypto? Nothing. And you know, I was expecting, you know, obviously I'm shorting SP 500, but I'm also betting on a lot of volatility, and that's not guaranteed yet. I mean, we're leaning bullish, but there's no promises. There's only probabilities, no certainties, right? So it makes it more difficult. There's no promises, and you have to adjust. So that's Adam. Matic. So Matic, we're within the channel. We got hit with resistance on the week. We're about to close, so that's a good close, showing that the bulls aren't in control. They're actually, you know, slowing down or losing. And then on the daily level, up candle before the downswing, up candle for the downswing, down candle for the upswing. So this was a reclaim on this one. We could just move it. Oh, I deleted it. Move it there, so it's more uniform. But if we close below here, I'm increasingly right. Yep, on the close. If we close above here, I'm increasingly wrong. That's that. So it's neutral on Matic, sand. Maybe I'll put labels just because it'll save some brain power of just, oh, what does that mean again? Why did I set this alert? This one's neutral too. It's just ranging. I'll just set alerts. So this one looks good. I mean, we're closing below this support, so we can just count this at the neutral range, and then we'll just say any close above here greater than is we're wrong. I should make that the alert. I'm wrong. And then below less than on the daily closing basis there. And then let's see, less than, I'm right. Okay, we'll just do all the less thans. Okay, greater thans, I'm wrong. Boom. Dispassionate. We know. Okay. Next. So we did sand, ETH, and engine. All right. Weekly. Doing good so far. I don't think I have to monitor this. I think we could just set an alert here. Greater than. I'm wrong. Less than. I'm right. Wow. So what a time to bet on crypto going down. Like it's just so uncertain. You just don't know. And then engine. All right. So this one's like right on the line. Oh, that's not cool. Hold the line. Love doesn't always come on time. Less than. I'm wrong. Oh, this is an upline. Greater than. I'm wrong. Close. I'm right. Less than. I just want to see a whole bunch of alerts. I'm right. I just want to see all of them. That's it. So that's the whole portfolio. And just as a conclusion of what we did, we assessed it. We're in first place. We want to keep first place. And the best way to keep first place is to cut the losers short as quick as possible, and then keep the winners as long as possible. And right now, the winners on the weekly and daily closing basis is UVXY, DRIP, 2x bear short, UVXY 1.5 leverage VIX, SPXS for weekly and daily closing basis. On the short side, 3x short, SRS is neutral on weekly and daily closing basis. And most, if not all, of the cryptos are neutral on a weekly and daily closing basis. So all about looks like 75% of the portfolio has a potential of turning against me. So, I mean, that's some risk. But with it being neutral, I feel more comfortable with my bet. Just because we're going to find out, at least by Tuesday or Wednesday, how wrong we are. But I expect that the first four that have a huge weighting, um, the first three that have a huge weighting would be able to carry me out of a small or daily loss. So that's kind of just figuring out my invalidation of where I'm wrong, and how, with everything else, just the levels of where I would be wrong, and the levels where I would be right. So thanks for watching. See you in the next video.